ReadySetFutures.com. It is the 15th of October, 2016, and this is your weekly review for the week of 10 October 2016. It was a hectic week for me, guys, I will tell you that, but let's get right into it. Our weekly reviews go as follows. We're going to look at our channel performance on the week. We're going to look at our trading performance on the week. Then we're going to get into some charts. We're going to continue to look at copper, at gold, at crude, and the E-mini 500. We keep it at a high level, no lower than the daily. Kind of oscillate between the daily and the weekly. And then we're going to go over to our commitment to trader information and see how that looks on the week. All right, so let's hit it. Channel performance on the week, I'm not going to lie, was probably one of our worst weeks since we started this. We've been doing this for about a month, little over a month. This week was rough. I got called out to business last minute. I was on the road Monday to Thursday, come home late Wednesday night. Had some struggles with doing this remotely, figure out how to get the data back, how to get the audio synced. It was difficult, I'm not going to lie. We hit 4 out of our 5 days, so automatically I'm going to grade myself at a B. But then 3 of the 4 days we produced a day late, and we came in the following day. So at best, this week was a C-, no better. So, I apologize to you guys early in the week for decreased quality. Not going to apologize again. It's just what it is. So we'll get better. We'll continue to do this, and we'll continue to get better. Trade performance on the week, also not great. Being on the road, I do have remote access to my computer, which I have, I've a redundant backup and all that kind of good stuff. So, I was able to place trades. What I was not comfortable in was not being available to react to market conditions. So, for me, being on the road, being remote, it is tough. Even if I am swing trading, I like to be available to manipulate orders when I need to be. And if you listened to our daily wrap, I believe it was for Wednesday, we wanted to get in short. We wanted to get in short off of some of these developing volume weighted average prices in the ES. We called out, I believe it was like 2137 and 2142 maybe. Those prices were reached that day. Unfortunately, again, not being available full time to react to market conditions, I chose consciously not to place a trade that day. So trading performance on the week, good in the sense that we didn't chase action early in the week. My system is still showing short. It's been showing short now since we started this, and it does not look like it's changing. So short anyway in the ES, but that's how it goes. So trading performance on the week, not great, but there were some high points of following rules, not chasing trades. And if you guys have been trading any length of time, you know that the process is just as important as the results, right? If we don't have a process that we're following, our behavior turns erratic, our behavior turns random. And for some of you guys, that actually works, and that's terrific. For me, not so much. When my behavior and my trading turns erratic and unpredictable, then my results suffer tremendously. So it's what it is. So that's trading performance on the week. Why don't we hit our charts? We got up here our daily chart of copper. You guys know on Wednesday, we saw quite the drawdown here in copper. We're continuing to trade lower. We have two volume profiles on the chart here. One is since the middle of July, the other from the beginning of September. And I bring them out because they were just the two most recent large moves. Our move down and our move up. Back in mid-September, we felt that price was going to hold here and roll over. It did not. We were proven wrong in that sense, but since then, we have also continued to like this market on the short side, and you can see price has obviously continued to trade down there. As we get into the COT report, you'll see this is fairly well supported by COT data, but copper price has been caught in this range really since the commodity fall down in 2014, and then most recently here in 2015. Price has toward the end of 2015, almost about a year ago actually, price began trading down in this trading range. We popped up for a 70% retracement, and then it seems like we were chopping lower, which is one of the reasons, just from a technical analysis, purely technical analysis perspective, I like this market lower. I do anticipate us coming down here and checking, the top of this resistance area, and especially this high volume node down here between $2.10 and $2.07. Coming all the way down to $2.07 would not surprise me. We've got a full week of trading action coming up. This driven out of news, I believe, from China, showing that their GDP is slowing and their copper consumption decreasing, and so we saw a significant move down this week in copper. So continuing to like copper short. Heading over now to gold. Gold, another big move down from the week prior. And we really like this call, right? Because this is something that we've been talking about since the beginning of the channel. A big move down in gold, even down here to that 70% retracement down at $1,280, or excuse me, $1,260. And this week was a chop fest in gold. I mean, it was chop city, up and down and down and up. We're at volume point of control now since this latest move down, $1,260 with a value area boundary, or I guess a value area region of $1,249 up to $1,270. Pricing on gold, you'll see when we get to the commitment of trader report, commercials are beginning to accumulate, and so our original, I don't want to call it, well, our original thesis in this instrument was lower before we moved higher, and we do expect a move higher longer term. If this is a new bull market in gold, this is in its infancy, and so in order to move higher, and I'm scrolling out here so you guys can see, these are the December lows. We moved up, we consolidated, we moved up, and we consolidated again. Now, the two consolidation zones that you see on the screen, they're both about the same period of time. They're both a couple months long. This one is, this most recent one is materially different given the sell-off, but that is only so that we could have ran these stops, we could accumulate longer positions before a move higher. So when that is the big question. The question, though, shouldn't be if, at least in my opinion, it's when. So that's gold. Moving over to crude. Crude had another kind of big move over these past couple weeks. This week, our inventory build, we saw one of the largest builds in crude volume in, I believe, 6 or 8 months. But we did break the cycle of gasoline coming in below, below expectations, beating expectations on the high side. But however, you could see crude's continuing to move up. What's the longer term view on this? So we have here a longer term Fibonacci. This has actually been on our chart the entire time. If you guys have watched our videos, you've noticed these Fibonacci retracement levels. Crude also coming down in August to reach out to this 70% retracement, and then chopping around until we got into our agreement to agree period here from our Saudi oil ministers. This bar here on Monday, if you recall, was out of Russia. Russia said, hey, we're on board to cut. Rosneft, one of their largest oil producing companies, going against the grain, and we saw a sell-off later in the week. I do still like crude when we get to the commitment of trader report. I sound like a broken record, I know, but when we get over there, we're going to see there's a story behind it and why we like crude lower. The current volume point of control for crude at $50.40 and a value area region 49.13 to 51.50 or so. That's from our agreement to agree. We're still trading well above the longer term volume point of control and the longer term value area boundary, which wouldn't surprise me if we run down to 49, if we run down to 48, if we even saw it at 47.50, I wouldn't be so surprised. So that's a little bit of what we got for you on crude. Head now over to the ES. The ES, as you know, we've looked at two volume profiles for a number of weeks, actually for all weeks since we started here. This is our volume profile since Brexit, and the most recent one you see on the screen here at 9 on September 23rd was from the Federal Reserve in their hawkish, we call it the hawkish hold. You can see the triangle wedge that, you know, is fairly commonplace. We broke to the low side. This was expected. And now we've been trading below the value area boundary for both our longer term profile from Brexit as well as the shorter term one from the Federal Reserve information. Yeah, these are big bars, right? These are big wicks, which means strong selling and buying, in fact. And so you see here at 2109 in a quarter, we have that as an important point from when our initial sell-off back here at the beginning of September. So that had also been on the chart, and we marked that as a critical area. We did take a trade here the prior week. We traded down to 21.26, and that was a winning trade. We had also, as I had said earlier in the week and earlier in this discussion, we were looking at 21.36. We were looking at 21.32 to get short. And I said in the beginning, you know, circumstances be what they are. We weren't able to, but it looks like that trade would be, at least it would be in the money. So that's what we got for you on the ES. We expect the ES continue lower. We expect continued elevated volatility, and this is all a result of what we're going to see coming up on our commitment to trader report. So this is what I just popped up here on the screen. We've got, so let me orient you guys. If you haven't seen these before, we have three lines on the chart: a blue line, a gray line, and an orange line. The blue line is our commercial traders. The orange line is kind of a conglomerate of other reportable interests as well as levered money and managed money interests. And then the gray line are all of our non-reportables. These are the public, otherwise known as dumb money. You and I, well, maybe not you, but I certainly fall into that category. And so we have these plotted on our chart. This is a 3-year stochastic on the top, and the bottom is a 6-month stochastic. And so why don't we take a look at crude? So we said crude lower. Why? Well, let's look at the pattern, right? This pattern here from April to about June 2015 was a large run-up in crude oil from, I believe, mid-30s up to a $60 price target. The one here from January, same kind of thing. From lows in the 30s up to highs in the 50s, and then we trade back down. Same thing here. If you look at where we're at for our kind of speculation team, 62.62, which is about traditionally where they've gotten to before they run out of steam, when if the commercial folks are not following them to propel price forward, they tend to liquidate their position, as you see here on the chart. There's been a solid 3 instances of this, and in fact 4 where it was a bit of a false start on the speculation group's part that caused this to roll over prematurely. And so now we find ourselves back up there. And if you look at the blue line, our commercial interests, they are continuing to roll over. So if we look now at the 6-month chart, the story just tells you much more so At least for the commercial side, you can see how dramatic their change in position really has been. So that's why we like really crude on the short side. You got to pick your spots, right? In any of these markets, we don't fight the trend. You may not want to be on the trend, but at least don't fight it. Don't stand in the way of this one. But that's why we like crude shorter. Moving over to copper. Copper on the week, right? We saw that downtrend, that big move down. Although not a big change. Well, there is a significant change, I should say, at least on the 6-month view of the commercial interests position. You can see the public traded about flat, and these speculators, they continued to accumulate position. We do continue to like copper short because that's where the momentum is. As you see, their commercial interests had moved from a high position here of 0.75, and that's where we tend to find significance is above that 0.75 region and all the way down to 0.2, 0.25 region on the low side as being kind of extreme positions that mark large moves coming. So we found ourselves in one of those, and now as you see, we continue to liquidate that position from on the commercials interest side. So that's where we get the story from copper lower. Moving over to gold, you can see the top here is our 3-year chart, and look at how long our speculation team and our non-reportable group, our public group, was prior to the move lower. This that breaking of the pennant that we saw. When it's one-sided like this, come on. You got to see it coming. Then also as well, our commercial group, most recently in the past 4 weeks, I should say 1, 2, 3, 4, 5, 6 weeks, we could see them beginning to accumulate. And that's what we see here on the 6-month. Now our speculation group, the speculating interests, right, though you can tell, obviously these are the people who are driving price lower in the past 2 weeks. Significant change to their position, and our commercial group continuing to accumulate slowly but surely. You see, even all the way back here from the beginning of June to present, they have continually added to their long position, or at least their net position changed positively. So that's why we like gold. We expect that trend to continue. You see here on this, back up here to the 3-year chart, we expect our mercantile interests, our commercial interests to continue to accumulate and continue to add to their position and help drive the price of gold up. Weekly review, we also take a look at silver, which is just right now on your chart or on your screen. We have said in the past that silver moves faster than gold. Silver's a bit of a leading indicator, at least from what my experience has been. And that was why, silver moved down to its lower boundary here of 0 2 weeks prior to the move down in gold. And we thought that portended a move in that direction for the gold market, and it did. And we see now our commercial interests moving higher quickly. Similarly, on the 6-month chart, their position changed this week quite dramatically, and we expect that to continue to occur, helping to move the market in gold up. Moving now over just to these financials in the commitment of traders. And guys, I am consciously aware of the time. I'm trying to move through this stuff. There's just a lot of material. ES, you see our public is continuing to accumulate down here. They are buying. And the difference here between commercials and dealers, this is dealer inventory that we're looking at here in the blue line. Speculator, this is levered money. We're calling it as a conglomerate. We look at other reportables, the levered money portion of the COT report, as well as the asset manager portion is wrapped up into this orange line. And you see they are continuing to sell down. My experience has found this market is much more controlled by these guys, by the levered money interests, and they are continuing to shorten. They are continuing to shorten their position. However, dealers beginning to accumulate, and the public really buying this thing with both hands, which may not end So great for them. But we'll see. We'll see how that plays out. Moving on, lastly, we have the dollar and the VIX to go. This is the VIX. Position on dealers is still record high. Levered money, not so much. Getting higher, but slow to the party here. If you notice, our dealers will tend to accumulate position and then sell into the rally. That's what happened here. This is, if you look at my cursor, this is back in August of last year. You see here 811, and whoop, we're selling right into it. This most recent action here toward the end of December, and then down toward the end of January, before reaccumulating a position. And as you see here, just historically high, they are beginning to liquidate, and you can see here on the 6-month chart that's a bit more apparent. And our levered money interest getting longer, but once we really start to see the ES move to the downside, which I do believe is in the cards, you'll see these guys change their position quite rapidly. Lastly, the dollar. The dollar, the past handful of weeks, has been just a cluster of activity right here around around even here 0.5, and then this week we see quite the big breakout. And if you look at the 6-month chart, which is pretty incredible to see both the dealers and our levered money group move to the extremes of the oscillator in 1 week. What this portends, who knows? Obviously, dealers are longer dollar now than they were prior, at least on a net position basis. On an absolute position basis, I would imagine they're still quite short, but on an absolute basis, they are much longer than they were, or excuse me, much less long than they were before. Which, if we follow dealers, if we follow the commercials, then you would expect the dollar to begin to make a move lower, which could have interesting consequences in the ES. Traders, that's what we have for you for our weekly review. We're at about 22.5 minutes. I want to thank you guys for tuning in. I also want to encourage you to subscribe if you haven't already, and for those that have, I want to say I appreciate it and thank you very much. If you like the video, by all means, like it. If you really like it and you feel like someone else in your social circle might find some value in it, by all means, share the information. And if you have the time, check us out on the web, ReadySetFutures.com. I'm TK on the week, and we'll be back on Monday with your next daily market wrap-up. Best of luck, traders. Have a great weekend.